Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. Okay, well, big news of the day. Micron beat on earnings. It was a pretty good beat, both top and bottom line. But we'll get to that and what I think going forward, because I think the most important thing to understand here when we're looking at mu earnings, I call it mu earnings, is that yes, we know the earnings are out. Now what? What does this portend for the market going forward and for the semiconductor space specifically going forward? Well, I'll tell you what I think later. But first, let's talk about what we're seeing here. Okay, we're seeing a chart of the S&P 500. Despite the mu beat, the semiconductors did fairly well, but then they gave up their gains. Not all of them, but the entire sector was up fairly well, but not as much or as great as people anticipated. So today we are Thursday, of course, the 25th of June. And before we get into the implications, and there is a lot to talk about, okay? Because you have to look at things from a trader's lens, looking forward and not what happened in the past, okay? So first, before anything, we're going into the technical picture. Guys, technical picture, bringing in the moving average right at the 50, still bullish. Okay, we're still in a bullish pattern, okay? The moving averages are going up, but we don't even have to look at the moving averages. Let's take them away. Here is the pattern that we talked about yesterday that I'm hoping we go lower, okay? But it doesn't have to go lower. We could just churn around this area and get some kind of like wedge forming, okay? The technical picture might form into a wedge, okay? Let's draw it so you guys understand what I'm saying. Trend line. There's going to be some kind of wedge happening here. Another trend line, some kind of wedge happening here. Okay, so it's like a wedge form. It'll go within this range, and wherever it breaks up or down, it usually continues. Okay, so it's not 100%, but this is usually a wedge after a big move is a very bullish sign and usually breaks up to the upside. Okay, so that's just one way of looking at it. It doesn't have to play out this way. Okay. But for me, regardless of what happens, technically speaking, okay, but now we're just talking about the technicals. So let me just get to the technicals first. It's still bullish and we're waiting. Okay. I'm hoping we break lower. Why? Okay. Because it ties in with the sentiment. Okay. The sentiment today is look right at the border of fear and greed. Okay. We're at near all-time highs and we're extremely fearful almost. Okay. The market momentum, all of the sub indices are in fear or extreme fear, including the put call ratio. Volatility hasn't spiked super hard yet. Okay. We're not above that 20-25 level, but everything else at extreme fear. Okay. Which is, I'm hoping we get that volatility spike. Okay. On the VIX, this is what I'm showing. Guys, you see, we're still at 18, 19. It's fairly elevated, but not above 20 panic level, between 20 and 30, let's say 20 and 28. I would like to see some kind of spike. I would love that. I'm hoping that happens, okay? Because the sentiment, if we get this spike and we undercut this 725 gap fill low on the SPY, like around here, maybe 710-ish, beautiful. We will easily get into the extreme fear, okay? So that's what I'm hoping for. It doesn't have to. We can still go much higher from here. We can just hit the border and continue to go higher, which would, maintain the pattern of higher lows here, not breaking this bullish pattern, fooling people. Okay, but I think the market will fool people. I think we go break lower, break the 50 here, so below, undercut this. I don't think we get to the 200, but if we get lower there, it'll be beautiful. Right around here would be beautiful. Market doesn't have to do that, of course, but it would be beautiful for me to go long because I want to be longer in this market. I'm very, very bullish, okay? And on Thursday, we always have the AAII Investor Sentiment Survey. And now we're starting to get the bears retreating and the bulls back. Okay, the first time the bulls are above their average in a long, long time. And the bears are still above their average. We haven't had them retreat. If you've been following, you know what I want to see. I want to see this sentiment reading get to like in 20-ish, the 20 level for weeks. 3, 4, 5, 6, 7 weeks of below 20, and the bull staying above average, 45, 50, like really, really bullish. This is why I maintain my bullishness, because we are in negative sentiment territory at all-time highs, meaning that nobody's all in. Okay, that's what I'd like to see. Every down move here, a lot of people are buying puts. They're like one foot out the door of this market. This is why I'm still bullish. Okay, so this survey, it's good. It still doesn't portend any exuberance in my eyes at all, especially here since we're at extreme fear, almost right on the border of extreme fear. So I love the sentiment. I love the fact that we're close to fear when we're close to highs, because any down move should be bought, and it'll get to extreme levels. Okay, which is what I like. I love this setup. Okay, this technical setup to me is beautiful. Okay, because we still have fear. So yes, let's get into but before we get to the mu beat and what it means, we did have some important macro on Thursdays. We always have important macro. Okay, we've got the PCE because we were looking at mu earnings yesterday. We talked about what would happen, and now we're going to talk about the aftermath. Okay, but before that, we also had another big print today, which is the PCE. PCE inflation. This is PCE index is for inflation, personal consumption expenditures. It was, I don't know if it still is, but it was the preferred metric of inflation that the Fed watched and followed, but maybe not with Warsh. Warsh said we're going to change everything. So he has his new inflation metric. And we mentioned it before. To me, Warsh sounded, they focused on the hawkish sentiments, but the media completely ignored the dovish sentiments. Okay, he changed the way he looks at inflation. He only looks at the first digit. He doesn't look at anything to the right of the comma. Okay, so inflation, if it's 2%, they had a 2% inflation target. So inflation is 2.9%. They still count it as 2% because they're ignoring the point, anything after the right of the decimal, which to me was dovish, very, very dovish. So maybe he comes up with a new inflation metric that completely ignores the PCE. Who knows? But for now, the PCE came in at 0.4%, but they were expecting 0.5%. That was the headline. So the headline PCE is going lower, which you should expect to see in a falling oil environment. Okay, because the headline includes oil prices. Okay, the core PCE, where is it here? The core PCE came out month over month. It was 0.3%. They were expecting 0.3, so nothing. So the core X oil and energy is still sticky. Okay, big deal. Doesn't really mean that much. It's been sticky forever. Okay, but the important thing is the PCE here is going lower than expected. They were expecting much higher, so it's going to come lower. As oil starts staying at these low levels and going lower, this PCE inflation is going to go lower, which will completely destroy the Fed's or the market's perception of what Warsh is going to be a hawk and raise interest rates. Because if inflation keeps going lower, he's not raising rates. You know my view. I don't think Warsh raises rates this year. Okay, it'll be very, very. I don't see inflation. I just don't see it ripping with the war over. Okay, so that's my view on inflation. I think it continues to get cold as the months progress. And we also had initial claims. Okay, and everybody's worried about the economy. Nope, initial claims 215,000, staying within this range forever. Okay, there are no unemployment, no people. It's not like in the Great Depression, not the Great Financial Crisis where claims were ripping every week. Okay, so the economy is doing well. And speaking of the economy, we also had a GDP print today. Q1 of 2026 came in at 2.1%. They were expecting 1.6%. Okay, again, if you know the macro, you've been following me. All we need is for GDP to stay within the 2 to 3% range for the year. Perfect. The economy's hobbling along. People have jobs. They're not unemployed here, and inflation will be muted. Okay, that's beautiful. This is all positive macroeconomic data. Okay, and that's why I remain bullish. Okay, so let's get to the big news. Mu beat. Okay, so this is my take. Okay, let's look at mu. Okay, of course it's up today, 15%. Finished at highs. It was higher. Okay, so this is a beautiful chart. Okay, I told you guys yesterday and before, if you've been paying attention, that I'm looking to get long mu. I like this stock. Why? Because I told you that fundamentally speaking, let's go to FinViz. Okay, let's bring it up again. Mu. Okay, Micron. The reason I love it is look at this profitability. Net profit of 56%, gross profit 80%. Okay, look, it has quick ratio of 3. Current ratio, it's massively liquid, no debt. Okay, and look at the forward P. It's only trading at 8 forward P. That's very, very cheap for these stocks. Okay, whereas, that's compared with Intel. Plenty of room to go higher, Micron, by the way. Forget the price of 1,200 or whatever it is. plenty of room to go higher because it's a cheap valuation. Whereas Intel, same business, profit margin negative on a gap basis. Okay, and look at the forward PE because they're assuming that it'll make money. It's a turnaround play. They're assuming it's making money in the future, and it's the little amount of money it's going to make in the future, which they are hoping for, which is their best case scenario, is at this price of 130s. It's still trading at 85 times forward PEs, which is a better stock. Do you want a stock that doesn't make money, or at best will make a little money and is trading at 85 PE, or do you want the monster, MU, the moonster, I should say? So, okay, so Micron is up. Now it had a halo effect. You have AMD also up, but not at highs. All these other micro devices went up, but not at highs. Still good looking chart and positive. Okay, I like this space. Okay, don't get me wrong. This is the space you should be in. Okay, I like this space a lot. Intel, even Intel caught a slight bid before coming back down again. Okay, so you have these moves here on SMH. Okay, up. Okay, because most semis are up today, not new highs though. Okay, so what am I worried at here? I think that because we had these MU earnings coming out, okay, and this is we keep mentioning it, negative divergence. You look, the RSI is going lower as the price is going higher. That's not good, okay, even from you, which I like. It's just showing that the upward momentum might start to slow down, okay. SMH, okay, negative divergence, higher price, even though today didn't, but it made a higher high, but a lower high on the RSI. You're seeing that everywhere. Intel especially. Okay. Up, down. Okay, it doesn't mean it has to play out, but you're seeing this. You're seeing this is like a sign of exhaustion. It's not a timing mechanism. Okay, it's a sign of exhaustion in the space. Okay, and SMH didn't make new highs after this MU move. So you have MU up. You have every catalyst possible. All AMD, they all had earnings. They all did well. Okay, so the question is, what now? Okay, I think because the catalysts are out, MU is making money. What else is going to drive money into the space? You had a huge move. You have no further news in this space. Everybody bought. Everybody's long. We have negative divergence. I just think we correct. I think going forward without any positive news, people start taking profits. They'll start seeing maybe 1 or 2 days more before going down. But I suspect we get a down move fairly soon in this sector. But if you look in the SMH, it's still way above the 50-day moving average. Remember, I'm looking for a first test of the 50. Okay, once that happens, you want to buy. That's your buying signal. Okay, whatever stock you want, wherever the SMH, wherever it touches the 50, it could be here. It could be at 5,800. It's at 636. I don't know when it's going to hit that 50, but when it does, you want to buy. Okay, and I would love it if it was a sharp down move. Okay, because then it has time to go higher. I don't like it when it starts hovering at the highs and it gets met by the 50. That's not as good of an indicator. Okay, you want a sharp move down. People freak out, but then it was a BS move and then it goes higher. That's what I'm looking for. So despite all this positive news on MU, okay, look at its 50. Look how stretched it far away from its 50. It usually has to approach it. Okay, everything with temperance. Okay, so let's get rid of the moving averages. My conclusion going forward in this MU and in SMH space is that we do correct because of these negative divergences that we see everywhere on this stock, on this sector. So I expect some kind of correction. Okay, and I will be buying SMH on the 50 if it ever hits there. Okay, so that's what I think going forward, and I think by this move, if this is all not, it could just power higher, but if it does go down, meaning the semiconductor space goes down, it will drag the market down, and we might get that hope of getting into the extreme fear, which will really, really power us to a move much, much higher later on in the year, in the months to come. Okay, so I'm looking for that, and as that's happening, I'm also looking for sector rotation, other sectors to pick up the slack. Okay, so I'm still keeping some powder dry. I'm not really making any big moves. Okay, I did short MU. I did short pre-earnings, I shorted the 800 put. I made a little bit of money. Okay, just little tactical moves here and there, but I'm not taking any big positions yet until I see a more optimal point on the SMH and on other stocks that I'm looking for. So I think the mu beat might be the last gasp for the SMH temporarily. Don't get me wrong, I love the sector. I'm just looking for a way to enter. And same with the market. I think it goes down too. Okay, we'll see. It doesn't have to play out. It can do that wedge and then break to the upside. It's all possible. Okay, but regardless, this is a bull market and you want to be long and you want to look for times to go long. Okay, so that's it, guys. We'll see what happens on Friday, the last day of the week. All right, take it easy.